If you think you can ignore the latest inflation numbers, think again. This isn't about numbers anymore. This is about financial survival and maybe opportunity. So the official monthly CPI has surged to 6-month high of RBA has hiked interest rates 13 times since May 2022. I mean, guess what? Maybe there's a 14th hike. But here's the silver lining. If we be proactive, maybe we could turn some of these challenges into opportunities. So stay tuned as we dive into the latest data and reveal how we can protect your investments, secure your home, and most importantly, thrive in the current market now. So the experts are predicting that. Hey family, my name is Lucky. First and foremost, tickle that subscribe button. Now I talk about property, finance, family, and business. So if you're passionate about it, like me, you're in the right place. Why listen to me? I've spent years working with the big four banks. I started my own finance company and advice agency, helped thousands of families get into their home, structure their home loans actually, and find, source, and negotiate some amazing properties. And we'll talk about those deals in a second. Today, we are focusing on the latest inflation numbers in Australia. So in this video, we'll explore how these numbers have impacted the economy, interest rates obviously, and how it's affected the property market. So let's start and let's dive in. So the latest inflation data shows the battle is maybe far from over. The official monthly CPI has spiked in the last 12 months. The numbers are crazy. It's insane. I know a lot of people right now may be struggling. I know a lot of people right now is focusing on how to save money as well as just trying to get through life with a mortgage. I guess hit me up in the comments. I want to know who's feeling the pinch at the moment. Are you thinking about refinancing? So inflation affects obviously every aspect of our lives. You know, your grocery bill, the energy cost, even the price of coffee all goes up, right? Like coffee now is getting so pricey. Stop with that stuff. Anyways, it is what it is. Now, this isn't just about numbers. It's real impacting real people. Let me tell you. So by increasing a lot of these factors, a lot of these costs, there's a massive psychological toll happening at the moment. A lot more people now are focusing on potentially even getting a second or third job if they can. And I know people are tired, but they're still putting more hours in just to make sure that they could meet the demand of bills and everything else. You know, when we see the past inflation trends, we see a number of spikes and drops, obviously. It's a bit concerning. In comparison to previous years, inflation now is again at a 6-month high, which is significant. And if we know RBA and what they've done, usually when there's been a massive spike in inflation, the knee-jerk reaction has always just been, oh, let's just do another rate increase. And we've seen that time and time again. So again, how does this affect you? How does it affect expenses? Well, price is going to go up. And most importantly, if you've got a mortgage, maybe that's going to increase as well. So that means for families, it can mean tough choices, cutting back on things that they want to do, cutting back on expenses, maybe looking at other ways to kind of just save money or look at alternative situations. A lot of owner-occupiers will feel it more than investors, that's for sure. You know, owner-occupiers, the only income coming into the household is them. So whereas investors and landlords, you know, you do have the rent coming in. Arguably though, if for example the renters, which are also feeling the pinch at the moment, it's not just owner occupiers that's having a cost of expense increase, it's also renters too. So landlords, slow down with the rent increase. A lot of these guys want to stay in your property for a long time. You know, hopefully you make it easy for them as well. So let's take an inflation last 4 years. Here's the CPI price index trend from 2020 to 2024. I think it's pretty interesting as well, the countries that we're kind of seeing May 2024 being pretty pivotal in that. Australia, USA, and the UK around about the similar inflation numbers as well. So that's pretty interesting. Look, we do work on a global market. It's not just an Australian market. And to understand what that looks like, you do need to look at globally. And the cost of funds are expensive elsewhere. And we're going to see that, you know, really on flow into Australia, which is again, pretty interesting. Interest rates and their impact. And let's go towards kind of recent developments. So inflation numbers have been a little bit steep in this respect. There has been a lot of hikes. I think a lot of people right now are looking at refinancing as an example. Great. In our finance business, we've seen a lot of people refinance, but we're not seeing rates dramatically. What people are doing right now is effectively refinancing and debt consolidating. So if, for example, they've got car loans or multiple credit cards, multiple personal loans, what they're doing is consolidating those debts. Effectively, it's actually cheaper in interest rate. The direction of just the home loan rate isn't the ideal situation in most circumstances. So that's usually what we have seen now from a point of view of the refinancing. Again, less dollar to dollar. A lot more people now that we're seeing is cashing out equity, purchasing multiple properties to hedge the rate. So it's pretty interesting how people are hedging. People are definitely talking to us regarding hedging and what that looks like for their position. But for the people that do have a normal owner-occupied home loan, definitely you'll feel the squeeze more than landlords. And there is strategies to cope with higher rates. So the first one is obviously refinance to get a better deal. We know about that, dollar for dollar. But most importantly, cutting down on monthly expenses, I don't think is the answer. A lot of people have already cut that down. The best suggestion that we could give is to look at your overall liabilities, personal loans, credit cards, all the kind of little random bits and pieces that are affecting cash flow, and then consolidating what that looks like. So outside of refinancing, it's not just, hey, let's refinance because to extend the term to another 30 years to make that lower rate. There's no point on doing that if you've got multiple personal loans, multiple car loans, and then you are paying excesses of 15, 20, 30% collectively every single month. So what I've done is I put there a graph of the RBA cash rate hikes from 2022 to 2024. It's a nice little visual representation of each rate hike and how it kind of impacts. And you can see that the moment that inflation does hit, RBA goes, oh, here's another rate rise. If we go to the 14th rate rise, what do you think it's going to be? 0.25 or 0.50? I don't know. Yeah, we'll see what happens. So the current state of the market. So national retail turnover has been downtrend since 2020. So there's a little bit reduced of consumer spending. So when retail turnover drops, it means people are spending less, which then obviously impacts economy and the property market. How does it impact your business or lifestyle? So the correlation between consumer spending and property prices is significant. When people spend less, it often reflects a cautious approach of massive commitments. So reduced spending can lead to lower property prices because there's less demand. On the flip side, spending were up, we'd like to see property prices increase a bit more. The data doesn't really correlate to a specific answer. The inflation numbers are pretty high, which basically means that yes, people are spending money even during this time. But Australia has been great. The spending has been consistent. We know that not to spend too much, too crazy, or whatever the case may be. So the inflations are there. I think, hopefully, I'm right here, but it was close towards end of financial year. For first-home buyers, look, you're fine. Like, I think a lot more first-home buyers now are staying and renting for longer periods of time, and because their rent has increased a little bit more, a lot more, let's be honest, that definitely affects their savings position. So we are seeing again a rush to rent investors and an increased understanding that the areas that they want to buy into, it's most likely going to be an investment property in an area that they can afford, potentially sell that in the next couple of years to then buy an owner occupied that they want to live in. Landlords, don't push too much renters out. Yeah. So tips for the first home buyers out there, seasoned investors, focus on cash flow positive properties and investment areas. A lot more people now are focusing on yield than it is capital growth. Obviously, usually we've seen capital growth with lower to middle kind of yields, but now we are looking at people more focused on cash flow positive properties. Cash flow positive in a sense, yes, but now first time buyers, don't get discouraged. There's massive opportunities out there. These opportunities, where do you find it? Talk to professionals, talk to great buyers agents out there, talk to great mortgage brokers out there. Happy to help you where you can and point you towards the right direction. But you got great professional advice there, kind of helping you towards what that looks like. Do your numbers, most importantly. There's no point looking at properties that look fantastic, but really the numbers are dog shit. We don't want that. What you want to do is make sure that you are acquiring a property that is fulfilling your financial circumstances versus just getting a nice looking property for the gram. And when looking for properties, check the local economy. What's the future development plans? What's the historical price trends? Maybe look at the demographic areas. How long the usual tenants has been there? The owner-occupied to investment ratio. Understand finance and look at finance trends. Where are the banks looking at taking more risk at? Usually those areas we've seen a lot more focus on, and we've only focused on not just property data to support it, but to catch on early on. We've looked at finance data and what the banks risk appetite is for certain suburbs. And when it comes to negotiating deals, do your homework. It's okay to walk away from a deal. Sometimes patience can lead to a better opportunity, and that's okay too. Like, there's a bit of FOMO, and I get it, but at the same time though, you want a deal, you want something that matches your financial circumstance, and that's something that's not putting you back or helping or stopping you from growing. So again, look at the type of properties. I see a lot of people focus on one particular type of property, let's say apartments or homes. Instead of looking at an apartment, we go, okay, cool, I can afford X amount in metro apartment, but can I afford maybe a home with land? And statistically, we have seen homes with dirt rise more than apartments. So let's talk about managing risk. So again, economic Volatility, it is what it is. We understand what it looks like. Diversify your risks. Most importantly, hedge your risks. So investing always comes with massive risk, especially in today's climate. But if you got a bad investment, realize it's a bad investment, offload it. There's no point holding it and go, oh, it's going to turn. If you don't think it's a great investment, offload that investment, get your money out, reset. Are you spreading out your investments? Let's be truthful with ourselves. What you're doing right now, is it working? Is it the right type of property to hold during this environment? There's nothing wrong with resetting an investment property. Yeah, a lot of people have this notion that you've just got to keep on holding and holding and holding. And yes, to probably an extent, makes sense. One thing that everyone talks about is emergency fund. To a lot of Australians, emergency fund is non-existent. What I would suggest during this time is have a strong look at your finances. The best thing to do is to consolidate those debts into one. And then obviously with those debts being one, it's easier to manage during this period. Look at the whole financial position and don't just look at the home loan in itself. So future market conditions and a short-term outlook. Look, inflation is above RBA's forecast. We know that. And it will be a catalyst for high interest rates, in my opinion. But RBA, if you're listening to this, wait for the next quarter if you are going to increase interest rates. I think the last one has been because it's been end of financial year, people spend, and we have seen usually higher spending during that time in the financial year, even towards end of year when it's holidays or Christmas. Wait for the next couple of months to see what it looks like and then make a decision. But RBA has been known for those reactions. Inflation, let's pump up rates, and hopefully they don't do that this time. Hopefully they're smart enough, and we are going to see if a 14th right goes towards it, we are going to see a lot more people struggle. However, we're also going to see those affordable markets aggressively take off. Borrowing capacities will be lower. So plan ahead. I think it's important that you start planning. CBA has predicted there's going to be a rate cut at the end of 2024. I think 2025 is where it's at. I've said it multiple times, but I don't think the bleed has stopped yet. I think the bleed will happen a little bit more longer, especially 2024. We've seen 2024 as more of a correction year, and I think close towards the end of the year, is there going to be cuts? I don't know. I don't believe so. I'll be so surprised if there is. I think 2025 is where it's at. So the next 6 to 12 months will be very, very tricky, but it also poses some insane opportunity. It really does, especially to the people that's trying to enter the market, first-time buyers who are now looking towards investing, people who have lower mortgages and taking out equity to then purchase their first or second or third or fourth investment property. Those opportunities are going to be insane during this time. It's going to knock out quite a lot of people, which is the shit thing, yes, but it's going to pose quite a lot of opportunity for the people that are ripe and poised for it and have got beautiful advice surrounding it. So guys, to finish this video off, in conclusion, that's my thoughts. I think in the inflation numbers there, the end of financial year numbers, I think RBA needs to just hold on a little bit, just plan. I think that's what's most important. Get some really good guys behind you. We are here if you need us. I'm here if you need me. Outside of that, hopefully you enjoyed this video today, and most importantly, please tickle that subscribe button. Share this with people that would like to talk about the topic. I want to know about your stories. I want to know about the next video that we could make, and hopefully you get something out of this. And that is a wrap. I'll talk to you guys soon. Hopefully you liked the video. Take care.